Well, June is over, and that means it's time for another monthly portfolio update. So in this video, we're going to go over what I bought, what I sold, if anything, and the overall allocation of my portfolio. Now, I could drag on for a while trying to just increase my watch time, but we're just going to jump right into it. So the buys that I made for June include Target, Dollar General, Tyson Foods, Ulta Beauty, and a new position, well, not a new position, but a reintroduced position, CROX. My allocations to those 4 or 5 companies has increased. And let's go over just the kind of overall allocation right now. All right, so as you can see from the graphs, not much has changed. I did also buy SPY, which is just in my 401k. So that's going to be just a reoccurring thing that happens all the time. So we've got about 68% in indexes, about 16.7% in large cap, 3.6% in individual mid cap, 1.5% in small cap spec, and about 5% or 4.7% in REITs. Cash has dwindled down to about 5.6% as I've been making these buys. So from the individual stock side, we can see that Meta is still the big boy in the portfolio at 23%. We have Amazon behind it at 13.7, Google 11.7, KRC at 11.2, and then we get into some of these smaller positions like a Dropbox, Cigna, GPN, ANET, and on. So let's go ahead and we will jump over to the each individual position again and kind of go over where I am on them as far as profit loss on a percentage basis and my thoughts on each position going forward. All right, so here we can see kind of the position breakdowns, about 67.9% on index and around 26.44% in individual. So individual has climbed a little bit as I took profits from other companies and rolled them into other companies now. So starting with VTI, nothing too much to go into here. I'm sitting on a total gain loss of 24%, 24.7. That's pretty skewed though, because a lot of this has been rolled over from different like retirement accounts. So the cost base is kind of like reset when I did that. If I had to liquidate and then roll over and then rebuy. So that is probably closer to like 75 to 80% or 75 to 100% because these have been basically accumulated since 2013, dollar cost average over 2013. We have SPY, which is my current 401k, and that's just how I track it. Had some small buys in there, up about 17.58%. SCHD, we're up around 4.8 to 7%, and I've been adding a little bit more to this one. Cost basis is about $69.25 per share, and I've been adding into this a little bit as it's gotten weaker. But with SCHD going forward, depending on my individual stock account, if that allocation gets bigger in the individuals and I get more exposure into what I believe are going to be good dividend growth stocks, I might eventually scrape SCHD and essentially just roll that into VTI and have just a VTI index as my overall index portfolio for the total US stock market, and then concentrate more on the dividend growth within my individual stock portfolio if that keeps growing. We'll see. So individual stock wise, we got the largest position, Meta, over here with overall it's about a 5.68% position. Profits are already been started to trickle in on that and realized on that, sitting on a 184% gain so far. Then we have Google at 2.87% of the overall portfolio, sitting on about 22% profit. Amazon at 3.36%. Sitting on about 36% profit right now. So with these three, I would, Meta I'm pretty happy with it unless it tanked a lot. Then I would consider maybe adding more into it, but it'd have to go down a lot, right? Cost basis on that's 101. So I'm pretty happy with that. I'm not really planning on doing anything with that. Google and Amazon I would actually like to pick up more of, but at the right price. I'm probably just going to stay patient, maybe do a little small buys here and there. And then if they sell off into my buy zones, that's when I would start taking larger chunks and accumulating those. Arista Networks ANET is sitting at about a 3.27% gain. That is currently a 0.88% allocation overall. And ANET is actually a new addition to the portfolio. I started buying it about 130 after earnings when it crashed, up until, I think it hit 170 recently. I just kind of had been taking chunks here and there. I'm pretty happy right now with it. Not planning on doing any more buys at this price level. I think it's at 162. If it got back down to like 130, I think I would start taking some more chunks and building that allocation out a little bit more. I can see that allocation growing to I really like this one. So if it got to the right price, and there's a thesis around how it could potentially get to that right price with the cyclicality of data center spread and perceived short-term negative momentum going into that cyclicality. So if we get that and it gets into the right price zone, which is probably going to be around 100 to 116, something like that, I could see myself making this a larger size position, maybe up in that, 2% range or so. Fidelity Info Services, we are red on that one by 10.47%. Our average cost is 61.10, and started buying into this one. And honestly, I probably should have added in the high 40s when it was down there. But I've just kind of been watching this one, let it play out, because they are doing a split off of WorldPay. That was basically a failed acquisition, a whole bunch of drama around that. So I'm just kind of like letting this one bake for a little bit. But if it did get down to that high, that 40 area, like 48 or so, I would consider nibbling a little bit more on this. Cigna is a fairly recent acquisition, the last couple months, I think. And our cost basis on that is about 257, and it's sitting at 280 right now, up about 8.87% on it. 3M is a newer position the last couple months or so, and cost basis is around 99.81. And sitting at 100, allocation is about 0.6%. And for 3M, it's really kind of like a play on essentially the lawsuits getting resolved, settlements coming in, and the price adjusting. And we'll see if it's a good or a negative thing. I'm definitely keeping this one like a little bit on the lower end. Technically, I think I already owned, I already owned and sold 3M around like 110, I think was my cost basis. And I want to say I sold it around 130. Then I recently got back into it. Target, I acquired on negative news, negative momentum. Price point right now, average cost is about 130. A very small position right now, about 0.24. And if I remember correctly, my more ideal accumulation zone for this was right around like 110, I want to say. So that's one that I'm keeping an eye on. We'll see if the sentiment around this and the news around it kind of fades away and it bounces back. But and if they can get their inventory issues under control, regain margins, it could be a nice comeback. But I'm open to buying more, but it would have to go down probably into that 1 to 110 range. Dollar General is a fairly recent acquisition, cost base about 156 per share, sitting up around 8.4% right now. And a little bit larger than Target, about 0.41% of overall portfolio instead of 0.24. And Dollar General is another one that I had a lot of these retails that I started accumulating like small chunks and hoping for another leg down. So if we get that other leg down, then I'll probably continue buying into these a little bit. So ULTA, Beauty, same exact thing, right? 0.28, so a little bit larger than Target, but kind of pretty small. Average cost on that was $455, and I really wanted this closer to $400. And I was a little bit late on the purchase. I was trying to see if it might get a little bit more negative momentum. It bounced back pretty quickly. So we're up about 3.43% on that. Tyson Foods is sitting about 0.61% allocation. Average cost about $54.12. And if you have seen me or on Discords, I even from a long time ago, I was saying 55 was kind of my zone. And I think I took a starter around 60, and then took a larger position in the low 50s. So cost basis right now is right around 54, which I'm pretty happy with. If Tyson got another leg lower, I would consider adding a little bit more to Tyson. Maybe if it got into the 40 area. Murphy USA has been a nice position so far. Cost basis 256. We're sitting at about 21.29%. Current price about 311. Current allocation about 0.75%. And for this one, I would not mind this growing in allocation. I was actually hoping to accumulate a little bit more of this. My initial buys were in the I think 260 to 240 area, right in there, coming out with about 256 average costs. And I was hoping that we might see it flush down about 200 to 220, and that was the point where it was like, okay, if it flushes down there, I feel a lot more comfortable taking a larger bite and upping that allocation a bit. But it didn't. It took off, and we're sitting pretty in the green right now. But it is one where if it did see some weakness and maybe got back down to my cost basis or something and the thesis didn't change, I might bump it up a little bit more. So with Murphy USA and a lot of companies that have high buyback amounts, the valuation is kind of like always evolving depending on the buybacks, because if they're buying back 4, 5, 6, 7, 8, 9% of their float every year, it's basically just a moving target. You have to revalue the company pretty frequently. At least I do. So my accumulation for this one has kind of jumped up a bit. Or the ideal accumulation range has jumped up a bit. So yeah, in 260, 270, I'd probably be interested in it. At least adding a little bit here and there. Global payments, GPN, we're sitting down about 0.87% on that. I mean, basically flat. Average cost of 99.38, with current price of 98.52 and a 0.89% allocation. So a decent allocation. And I'd left room to add to this one if it got into, I think it was like a $70 to $75 range, which is one of my scenarios potentially playing out. So I left room to add, and it's just kind of been like hovering around my cost basis, really. I think maybe at times I've been up like 10%, been down 5%, been up 5%. Like, it's just kind of been hanging out. So yeah, I'm just hanging out with it, and if it got down to like 70, 75, I might take another stab at it, add some more shares. CROX was the new one that was purchased last day of June, and I purchased a decent chunk right off the bat. Now, if I don't know if you're in the Discord and I was doing portfolio updates back then, you already know that I used to own CROX and I sold CROX. I think my cost basis was about 70, and I took off a decent amount in the 125 to 135 area. And just kind of, it ran pretty quick, and I just kind of wanted it to chill out. So at the time, I think that's when potentially I was starting to load up a lot more on Meta, so freeing up capital, taking it to other opportunities. But now CROX is kind of back into a decent zone. We're up about 1.25% on it. So hey, one day, and 1.25% day trader. Whoo. All right, so going to Dropbox. Dropbox, you can see, is a decent allocation, so that's about 1.28%. And the current price tag is about 26.67. My current cost basis is 21.80, and this is one that I was starting to accumulate probably around 23 and down to 20 and under 20 as well. So slowly built it up more and more and more. And we're sitting on about a 22.34% gain as of now. So that one's looking pretty good. Pretty nice so far. And kind of the same thing. I don't think it's going to get down to like the $18, $19 range, but if it did, I'd consider adding, I don't know, it's already built out pretty good. So maybe I would add a little bit. If anything, this one might be on the trimming block. If it gets some type of crazy push and gets towards like $35, $40, might start, trimming some of those profits off of it. iRobot acquisition play, that's, it is what it is. Cost basis 41.65, current price 45.25. The acquisition buyout, I believe, is at 61, and it's going through a lot of regulatory crap right now. So we'll see if that goes through or not. Digital Bridge, kind of more speculative play in kind of real estate, well, tech-focused data center / cell tower real estate company that is no longer a REIT, that was a REIT. So setting up about 26% on that, allocation 0.53% of overall portfolio. DPSI, this is just a fun one. Pretty much flat. Very, very low allocation. KRC. All right, we're sitting down 9.31% on KRC. It is a larger allocation at 2.76%. It is, I believe, my fourth largest holding, and I'm pretty happy with the allocation right now. You know, if something crazy happened and it got down like, you know, low 20s, I might take another chunk, as long as the investment thesis holds up. And I don't see anything changing. Now going into Alexander Realty, we have ARE, and basically I just took like a very small position as a watcher. I like the business, I like the company, I didn't like the valuation, and now we have a short report that got released, and it looks like, you know, maybe I'll get an opportunity. We'll see. I don't know. My buy points for Alexander Realty were around $80 to $100. So if it gets down to 100, I might take a chunk and you know, kind of wait for 80 and see if it if 80 comes along, then I might take another chunk. So we have IIPR down 5.43% on that, at a decent allocation percentage, 1.31. Pretty happy with this. Just gonna let it bake. As long as these REITs are in what I think are decent valuations, then I will probably just reinvest the dividends. Brandywine is going to be office, mostly office, maybe a little bit of license science. Lower quality portfolio that has been quality upgraded over time as far as their real estate portfolio. Leverage ratios are a little bit more scary than something than like a KRC or ARE or IIPR. It's more risk, a lot more risk with this one, which is why the allocation is low. So a lot more risk with this one. I'm pretty happy with it though. You know, I've kind of placed my bet, and cost base is around $399. It's currently sitting at $465 with a 16.4% gain so far. And yeah, just kind of letting this one bake. You know, I might be interested in adding more if it got down to like 3 or something and the thesis was the same, but this could be one where if it gets down to 3, it's like there's a reason it got down to 3 and you might be looking for the exit. Okay, so or I might be looking for the exit. So yeah, that is it. Cash position sitting at 5.62%, so that's gone down a bit. And yeah, kind of thoughts on the overall portfolio. I hope you guys are having a great day. Have a great 4th of July weekend. Hope you guys you know, had fun in June picking up some good assets, and we'll talk to you later. Hey, if you like videos on investing and discussions on investing and asset allocation, portfolio management, and just stock valuation, feel free to like and subscribe to this channel. I would really appreciate it, and we'll see you around.